Hey guys, how's it going? It's Philip at Trade Genius. Real quick before we get into today's video, I just wanted to show you a little bit of what we do. We had a signal to go long here on our 4-hour chart, and we like to catch those at the bottom of our linear regression channel, and this created a nice pop. We gained about 7+% on this trade on a very short hold. Right now, that's kind of the ranges that we're seeing on a lot of these trade setups. Smaller targets, but we take what the market gives us until we start getting back into a growing market cap trend, and then we'll get bigger percentage gains. But thought I'd share that with you guys. This did a up down up pattern, which I don't get a lot of those, but I do like them out of consolidation like we got here. Very high probability of a pop when we get those. So anyway, thought I would show that. Now let's get into today's video.
Trade Genius.
So there's a website called crypto51.app, crypto51.app, and fine folks there created a site which basically measures what it would take to rent hash power from the NiceHash server farm and attack one of these proof of work networks that various altcoins have. What it would take to not only take over the majority or the 51% of the hash power of the chain, but what that attack would cost. It's important to note that some of these altcoins are really vulnerable to this. We saw this recently with Bitcoin Gold. They essentially took over 51% of the network and made off about $18 million worth of tokens. So how does that work? Well, essentially, what happens is that when proof of work cryptocurrency nodes are set up to recognize the blockchain with the most blocks, so it's the longest chain, and miners that have more than 50% of the hashing power can take advantage of this by sending funds to the chain that's currently being recognized by all of the other miners or nodes, and then secretly mining on another chain that has more hash power than the main chain. And then since the other nodes aren't aware of this, they'll accept the funds that are being sent out. And then what happens is they can later release this chain that they've been working on. The nodes will accept it because it's the longer chain, and then that previous transaction gets canceled out. And essentially that means that they can now double spend. So that's in a nutshell how that works and why this is important to see, that when you have chains that are able to be taken over at a small cost, that's a problem. So what it is this column here, NiceHashable, means this is how much you can actually, in an hour, you could take over the network. So Litecoin, you can only take over or hit 6% of the chain, Bitcoin 1%, Ethereum 2%. So you're not going to get anywhere near a 51% attack on those. So that's what you want to see. You want to see a low number in this percent column. When you start getting up near that 51%, that means that the chain, as far as its robustness against such an attack, is vulnerable. Like Ethereum Classic's at 49%, so you couldn't quite do it, but that's a little close for comfort, right? Again, the cost on this is not chump change. That would cost you $16,000 an hour. So yes, there are entities that could definitely pony up that kind of money to do it, and they will. But again, you want to make sure that your chain is not susceptible to this. If you look at Bitcoin, that's a pretty decent market cap, right? You could easily do a 51% attack on that chain and it wouldn't even cost that much, $598. So that's the kind of thing that you want to be aware of. And what may end up happening is that if these chains can't get more hash power to protect themselves, we may start to see a trend of where either they are looking to build on top of another network. So you could have they turn into an ERC20 type token. Although some of these may not be architectured in a way to do that. But you also could have things like interchain linking. So you'd proof of work would be tied to other stronger chains, but that requires cooperation amongst chains. So there's things that would need to be worked out. So you could, or simply these things just don't get the hash power that's needed and they end up going away. So you can see where these coins that are weaker could certainly end up getting abused and ultimately go away. And we could see kind of a, this could be a catalyst for a consolidation in a lot of the altcoins if they don't get enough hashing power on their chains to protect against such attacks as these. So, Bitcoin private, you can easily take over. Monacoin, Electronium, Zencash, I mean, on and on and on. So, we're gonna when we go over and cover alts, we're gonna focus on ones that have are backed by a strong blockchain versus these other ones that are susceptible. And this is a good website, crypto51.app. I think it's a great service that they did to keep everyone aware of what the risks are. And so, you can better invest on quality projects. All right, guys, that's pretty much it. Just thought I would share that with you guys if you had not have heard of this website. Pretty eye-opening stuff. All right, guys, thanks for watching. Please hit like and subscribe, and I'll see you on the next video. Take care.
Trade Genius.